Mike Darda, what's your take on this, sir?
Yeah, I agree with that. I think the inflation statistics are going to be more important than the election. Typically markets do like gridlock, but as mentioned, we've already had a gridlock for all practical purposes, and the Fed is really laser focused on the inflation readings. It's put the business cycle in a bit of a pickle because inflation will tend to lag the cycle. So if you have the Fed chasing down lagging indicators with a very rapid succession of interest rate increases and quantitative tightening, there is a very significant risk that the Fed significantly overshoots neutral. And, that does put us in a bind for next year in terms of the business cycle outlook. But I do think we're going to get some good news on CPI inflation. One quick statistic for you, John. The prices paid index from the ISM manufacturing data has collapsed to 46.6 as of October. Back in March, it was above 87. There's about a 6-month lead time from that index over the headline CPI. So we should, I'm not going to bet the farm on the next reading this week, but I think over the next 3 to 6 months, we should have some better news on the inflation front.
Mike, answer this one for me. Do you think inflation can fall as quickly as it rose?
Yeah, I think it can fall quite rapidly if the economy is slowing significantly, and I do think there is evidence of that. We've had a lot of volatility in the GDP statistics and a lot of confusion, but if you look at real final sales for the private sector, we've lost a tremendous amount of momentum over the course of the last 3 quarters. And in fact, Q3 was essentially stall speed. There's actually a slight lead from those statistics to payroll growth. And the most recent numbers would suggest a fairly significant deceleration in the labor market. And if we think about what the Fed is focused on, headline and core inflation together, but some of the more lagging aspects of inflation that have a lot of inertia, wages, rents, core services inflation, that's going to take a bit more time, but I do think those numbers are going to be moving down as we get into next year with much weaker growth and probably a recession.